2-3 weeks ago, maybe 4 now, we see China come out and say we have integrated through our new renminbi cross-border payment system, Mbridge network, that is Mbridge, 11 Asianic countries and 5 Middle Eastern countries that comprise 38% of global GDP. They are now fully integrated into this new system. This system, and by the way, those Asianic countries, they're countries in Southeast Asia. These countries combined are 38% of global GDP, and this system settles in 7 seconds, not the 3 to 5 days that it takes with SWIFT. No going back between dollars and your local currency 4 times to do a transaction with another country. No, it's 7 seconds with a 98% reduction in. And so right now you have those countries already signed up to it. Now, I want people to think about something before I explain what Sergey Lavrov just said, because to me, the pushback against BRICS, Charlotte, is it's not big enough. And Daniela DiMartino Booth kind of said something like that here at the conference, and I think her and James Rickards got into a little bit of a tussle over it all. He disagreed with her. I do too, respectfully, because if you just focus on BRICS, I guess I could understand that. And okay, 10 countries, and even though they are a growing, a growing group of countries and legitimacy, is that enough to challenge the Western hegemony? Maybe to a degree, maybe not. But what got me into the BRICS to begin with was understanding the Belt Road Initiative and the Shanghai Cooperation Organization. Those two organizations alone, the SCO is the largest regional military and financial organization on the planet that comprises roughly 50% of human population and 35% of global GDP in and of themselves. All right. The Belt Road Initiative is 70% of human population, about 48 to 50% of global GDP. Now, there's overlap between the Shanghai Cooperation Organization and the Belt Road, but I want you to think about it this way. You add in the Shanghai Cooperation Organization, you add in the Belt Road Initiative, because along with the BRICS, because what we just found out about 2 weeks ago was that the yuan is now convertible into gold through the Shanghai Metals Exchange, and that they are building a network of multi-jurisdictional vaults starting in Hong Kong, in Saudi Arabia, and then all throughout Africa and Asia, and probably into South America, to internationalize the yuan, where we pay for goods with yuan and settle imbalances in gold. So if I'm China, I buy gold from you, Saudi Arabia, I pay it in yuan and settle gold in the vault in Saudi Arabia. You can pull the gold right out of there. These multi-jurisdictional vaults allows it to be in various jurisdictions without it being in one central location. So keep all of this in mind. So you got all of these players that represent, goodness, close to 90% of human population. The Belt Road, the SCO, Shanghai Cooperation Organization, the BRICS, and then the Eurasian Economic Union. Now, you got the president of Belarus who said the Shanghai Cooperation Organization and the Eurasian Economic Union should be melded into BRICS. They're all the same players. Okay, hasn't happened yet. But the same thing is true with the Belt Road. Largely underdeveloped, resource-rich, and China comes in and builds up the infrastructure, roads and bridges and maritime channels and railroads, and allows them to build gold and silver mines and oil refineries, and allows them to industrialize through their natural resources. They get a piece of it. All of this is in a thrust to develop not only the yuan, but in my mind, to set an infrastructure for the BRICS. Why do I say that? Because Sergey Lavrov came out 2 weeks ago, and no one is saying this. To my mind, everyone is saying what I'm saying right here. Vince Lancy has done an amazing job talking about this. But the one piece that everyone is missing is what Lavrov just said. He said that we will open this technology up to non-BRICS countries. However, it is not compatible with the dollar, the pound, or the euro. So think of it in terms of the Belt Road. Think of it in terms of the SCO and the BRICS. You are opening up this ability to settle in 7 seconds outside of SWIFT and then settle imbalances. And by the way, that's in local currencies. And so if you have a currency and I have a currency, and we really never get to use it very much cross-border because we're always using dollars, now we get to use our own currencies, which strengthens our own monetary ecosystem. And it also inspires fiscal and monetary prudence. We have to be wise and smart in the way that we deal with our currency. Not too much inflation, not too much printing, not too much anything. We build our own infrastructure. We trade our local currencies over a bridge network that settles like that outside of SWIFT, settle imbalances once a month or once a quarter in multi-jurisdictional vaults in gold, which is replacing not the currency, but what backs the currency, like the treasury. And these vaults will be like the skeletal system of a new financial matrix. So what I'm getting at is simply this. You now have a BRICS infrastructure that is growing. 48 countries have applied or expressed interest. 23 or so have officially applied, Vietnam being the last one to officially apply. Indonesia was just admitted. Mexico's there this year. You got all of this interest. But now, even if you're not a BRICS member, but you are aligned with the BRICS countries, you have the ability to use this bridge network, not just for the BRICS. That, to me, right there is the biggest development, period. And that goes hand in hand with what Brazil, the chair for Brazil, is talking about. And that is a payment system that is independent of the SWIFT and independent of the dollar. You put it together, it's like a chessboard, right? You're setting your pieces up on the chessboard so that you're very close to, you're screwed, checkmate. Now, they haven't got to that point yet. But when all these vaults are built and all of this infrastructure, independent of the BRICS countries, including the BRICS country, gains maturity and the settlement system in gold really works and using local currencies really work, this is something that no one is counting on. And I think it accelerates tremendously this payment system that over time disrupts the settlement in dollars and the reserve status of the treasury, which is being replaced by gold. I think it's massive news, Charlotte. I really, truly do.
Let's step back for a minute. I want everyone watching this to take a breath, turn off the noise for just a second, and think. We are watching right now in real time the dismantling of the US-centric financial system. And it's not happening in some shadowy back room of conspiracy theories. It's happening in plain sight, and nobody in the Western mainstream is talking about it. Not CNBC, not the Financial Times, not even the guys who write hot takes on Twitter for a living. They're too busy cheerleading the next Apple iPhone launch to notice that the dollar system they're all paid in is being quietly, surgically replaced. Now, I'm not going to get overly dramatic and say we wake up tomorrow in a post-dollar world. But let me be clear. What just happened 2, maybe 3 weeks ago is one of the biggest developments in the global monetary order since Nixon closed the gold window in 1971. I'm talking about China's announcement that their Mbridge system, the multi-central bank digital currency platform, has now fully integrated 11 Southeast Asian countries and 5 Middle Eastern nations. Together, these countries make up 38% of global GDP. Let that sink in. 38%. That's not some fringe movement of developing nations. That is the economic backbone of the non-Western world. And they're not using SWIFT anymore. They're not converting their currencies 4 times just to do business. They're using Mbridge, and it settles in 7 seconds. 7 seconds. You send a payment in Thailand, and it lands in Saudi Arabia faster than your kid can microwave a Pop-Tart. Meanwhile, we've still got JP Morgan wiring money through New York, bouncing off London, rerouting through Frankfurt, before it finally arrives in Singapore 3 days later. In the age of AI and quantum computing, our financial plumbing still looks like it was designed by Alexander Hamilton. That's not just embarrassing, it's a geopolitical liability. Now here's the kicker. Mbridge is not compatible with the dollar. Let me say that again slowly for the folks in DC who might be watching this in a panic room. It is not compatible with the dollar. Sergei Lavrov, yes, the Russian foreign minister, who always looks like he just bit into a lemon, he came out and said it explicitly. This is not some speculative theory. Lavrov stated that the system would be open to non-BRICS countries, but it is not interoperable with the US dollar, the British pound, or the euro, which means the West is being cordoned off financially. Think of it like a firewall going up around a massive alternative economy, where settlement happens in local currencies and is backed by physical gold held in multi-jurisdictional vaults. This isn't some pilot program either. These vaults are being built now, starting in Hong Kong, Saudi Arabia, then spreading across Africa, Asia, and eventually South America. This is not a payment rail. This is the infrastructure for an entirely new monetary system, and I believe it's being set up deliberately to challenge, even replace the dollar's role as the global reserve. Now, before anyone shrugs this off as some BRICS pipe dream, let's look at what's really happening. We know from public records that 48 countries have either formally applied to join BRICS or have expressed interest. We're not talking about banana republics either. Vietnam, Indonesia, Mexico. These are massive economies with young populations, growing trade surpluses, and crucial resources. And the Belt and Road Initiative? That alone covers nearly 70% of the human population and half of global GDP. Add in the Shanghai Cooperation Organization and the Eurasian Economic Union, and you've got most of the non-Western world building infrastructure for an alternative financial system. But here's what almost no one is saying, and it's what I believe will flip the table. This system is not designed to kill the dollar. It's designed to make the dollar irrelevant, and that's far more dangerous. It's like being in a room where everyone starts whispering in a language you don't understand. Suddenly, you're not in the conversation anymore. Because if you're Saudi Arabia and you're selling oil to China, and China offers you a settlement in yuan backed by gold held in a vault inside your own country, why would you choose dollars that have to be routed through 3 Western banks, taxed, surveilled, and settled days later? You wouldn't. And once that trade happens once, it becomes the precedent.
Ultimately higher than anyone thinks possible. I think it's the most undervalued asset on the planet. The word that I think of is asymmetrical, low downside, high upside. I have been one of the few people who have either been too stupid or had the guts to say that I believe it's the military-industrial complex that has been suppressing the price of silver for a very long time. And I think they've gotten caught. Let me explain. Most of my career, no one ever stood for delivery. Never stood for delivery. Right now, we see the LBMA, the London Metals Exchange, which has watched its inventory. If anyone out there Googles silver stockpiles LBMA, you'll get a graph. And it's like a ski hill. It's straight down to the lowest level of silver since they started keeping records in the 140-year exchange. It's being drained. Now, the LBMA is a T+1 settlement, meaning T for trade plus 1 settle. Third day your metal is moving. Well, they're telling us that it's T+8 weeks because they don't have enough in the way of trucks or manpower to move it. David Jensen, who does an amazing job on Substack, will tell you that they have 190 million ounce float. They have 800 million ounces of silver there, of which 190 million are available to be delivered against the contracts. The other 500 plus million belong to the ETFs large. But they trade over 1.9 billion 1.9 billion ounces per day is what they are in essence doing. The number that they really do is roughly 200 million ounces per day. That's what they post. But he goes on and shows proof, and it's been verified that they only post the final settlement numbers, that they're trading 10 times that amount to 1.92 billion ounces per day, 3.5 times the annual global mine supply, 10 times the float. So if everyone stands for delivery, and you only have 1/10 the silver there, do you see a problem? Well, yeah, we're T+8 weeks now. Sorry, not the T+1 that we told you because we don't have enough in the way of trucks. So let me back that up. How does it all happen? 3 years ago when I gave a speech at VRIC, where I always see you, Jay Martin's conference, and Jay is here, and it's the only other conference I always go to. Check it out. It's a good one in Charlotte's backyard in January in Vancouver. I said there's 500 ounces in the tip of a Tomahawk cruise missile. That's the research I came up with. And I don't know anyone saying that before that. A guy comes up to me in the audience and he says, I work for the Department of Defense. I almost fall over. He says, I have designed and helped develop cruise missiles, and I think there's some silver in it, but I think you're wrong on the number. Okay, sorry. I helped develop the Tomahawk cruise missile. These are all declassified. And he showed me the pictures and he said, you're right, I'll be damned. Between 13 and 14 kilograms of silver in the cone of almost every cruise missile you can think of. Hellfire, Tomahawk, Patriot, you name it. And all sorts of high-tech weaponry and aerospace and submarines, they all have silver in it. And so the military needs all this silver for high-tech weaponry. It used to be calculated in the supply-demand numbers out of the Silver Institute. Not anymore. It vanished. We have a 250 or 60 million shortfall every year and no military applications in the supply-demand numbers. Okay, so even more interesting. And then you get to the point where you take a look at COMEX. There are 8 banks, 8 Western commercial banks, 8 that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market in silver. this tiny little market, you have 8 banks that are massively short. And the LBMA, they're trading 3.5 times the annual global mine supply every single day, 10 times the availability of the silver that they have backing those contracts. All of this stuff. Now ask yourself, why? Why would 10 Western banks, 8 Western banks, hold a short position as extremely large as it is, and almost all of it naked, meaning it's not backed by anything? And the question is, in my mind, answered by the reality of the military-industrial complex.
Let's take a closer look at what's really happening. While Wall Street is glued to the next Fed rate cut, and whether Nvidia hits a $5 trillion market cap, the BRICS Plus nations are quietly erecting a scaffolding around a parallel monetary ecosystem, one that doesn't need dollars, doesn't need SWIFT, and doesn't need US treasuries to function. And what's fascinating and terrifying for the US is that this system isn't even anti-dollar. It's just post-dollar. That's the subtle but deadly difference. If you're China, why would you want to blow up the dollar? That's not the game. That's not the play. The move is to slowly render it irrelevant through attrition. Death by 1,000 bilateral trade agreements settled in local currencies, backstopped by gold. That's exactly what's happening right now, and the West is treating it like a sideshow. Take Brazil. They've already done over 100 billion when settled trade this year. Not promised, not planned, done. India? They've paid for Russian oil in rupees and dirhams. France, yes, France, purchased liquefied natural gas from China in yuan. Why? Because no one wants to be the last fool standing when the music stops and there's no chair left marked US Treasury bond. Let's talk about those multi-jurisdictional vaults again, because this is crucial. These aren't just gold vaults. These are nodes in a decentralized global settlement system. Picture it like a financial nervous system. Hong Kong, Riyadh, Nairobi, São Paulo. Vaults that hold gold but function like collateral warehouses. If you're China and you buy wheat from Argentina, you pay in yuan and settle the balance in gold, held not in Fort Knox or the Bank of England, but in a BRICS-affiliated vault. That gold never has to move, but its mere presence, audited, verified, and accessible, is what gives the entire transaction legitimacy. That's trust by design, not trust by hope. This is what's replacing the US Treasury as the global reserve asset. Not because people hate America, but because trust in American governance, fiscal restraint, and monetary sanity has collapsed. Just look at the numbers. Over $35 trillion in federal debt, a Fed balance sheet bloated with toxic assets, and over $1 trillion in interest payments alone. This is not sustainable. This is not even laughable anymore. It's terminal. Now here's where it gets personal. Let's say you're a 50-year-old investor. You've been told your whole life that stocks for growth, bonds for safety, and cash for emergencies is the only way to build wealth. You've got 60% of your portfolio in US equities, 30% in treasuries, and 10% in cash. And every quarter, your financial advisor assures you that the market always goes up in the long run. Okay, let me ask you something. What happens to that model when the very currency those assets are denominated in loses 30% of its purchasing power, or when the world stops buying treasuries and yields spike to levels that bankrupt the federal government, or when the next geopolitical rupture forces the Fed to pivot again, igniting another round of inflation? That traditional portfolio isn't just outdated, it's suicidal in this new environment. Now let's flip the script. What if instead of treasuries, you hold physical gold? Not GLD, not a line item in your brokerage account, but actual, allocated, privately vaulted gold. That gold, unlike bonds, has no counterparty risk, no default risk, no yield to be inflated away, just pure monetary ballast. Gold doesn't pay you interest, but it protects your interest. And in this new world, that's infinitely more valuable. Still skeptical? Fine. Let's talk about central banks. Last year, global central bank gold purchases hit a record, a 55-year record, over 1,100 metric tons added. That's not a few fringe countries looking for shiny trinkets. That's Turkey, China, India, Uzbekistan, and even Poland backing up the truck. What do these guys know that CNBC won't tell you? They know the system is changing. They're voting with their vaults, and they're not buying gold because they're gold bugs. They're buying it because gold is the only asset that survives when trust dies. Here's a headline from Reuters just this year. China adds gold to reserves for 7 straight months. And that's not a fluke. That's a strategy. And don't be surprised if they're understating it, just like Russia did for years. They acquire the metal quietly via back channels like the Shanghai Gold Exchange or through domestic producers, then announce it retroactively once it's politically useful. The West plays checkers. These guys are playing 4D chess with invisible pieces. Now let's address the elephant in the room. But Andy, the dollar is still 60% of global reserves. Sure, for now. But that number was 71% 2 decades ago, and it's falling fast. The kicker? Most of that 60% is held by US allies who are politically tethered to us, but even they're starting to hedge. Look at Saudi Arabia cozying up to China. Look at France conducting trades in yuan. Look at the Swiss National Bank selling US stocks and quietly rebuilding its gold reserves. This isn't a revolution, it's a rotation. And here's the most important thing I'll say in this entire segment. When this rotation hits a critical mass, when just 10, maybe 15 more countries flip the switch, the dollar doesn't just face a decline, it faces abandonment. The trust tide doesn't go out slowly. It collapses in a wave. If you're not positioned for that, if you think you'll just sell your stocks when the time comes, you will be too late. Liquidity vanishes in a panic. That's not fear-mongering, that's math. So what do you do? Number 1, get physical, not paper gold, not ETFs, physical, allocated metal. Vaulted offshore if you can, accessible, secure, and auditable. This is your base layer. This is your firewall. Number 2, diversify out of dollar exposure where possible. That might mean holding assets in other currencies, or it might mean allocating to real estate, private equity, or resource stocks denominated in something other than USD. Number 3, stay informed. And no, that doesn't mean watching Jim Cramer or reading Bloomberg op-eds. It means studying the monetary history, reading foreign sources, and understanding how empires decline, not with fireworks, but with indifference. Number 4, think generationally. This is not just about protecting this year's gains. It's about preserving your legacy. Your kids, your grandkids, they're the ones who'll live in the system that emerges from this transition. Make sure they inherit wealth, not just fiat digits. And number 5, join the right conversations. Stop thinking like a consumer and start thinking like a central bank. They aren't buying the dip in tech stocks, they're buying the dip in trust. I'll leave you with this. We are witnessing a bifurcation of the global financial system. On one side, you have a Western bloc clinging to an unsustainable debt model, inflating away the value of everything they touch. On the other, you have a rising multipolar order-building infrastructure, storing real assets, and designing trustless settlement systems that do not require Wall Street, Washington, or the IMF's permission. And sitting between these two worlds is you. Now you have a choice. You can pretend this isn't happening. You can ride the dollar down, hoping Jerome Powell pulls off a soft landing while Larry Fink lectures you about ESG. Or you can step outside the matrix, take control of your money, and anchor yourself in the one asset that has outlasted every empire in history: gold. This isn't a trade. This isn't a bet. This is exit velocity from a dying paradigm. Get educated, get positioned, and get ahead of the collapse of trust. Because by the time the mainstream catches up, it won't be a reset. It'll be a reckoning.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.